Good afternoon, everybody. It is Monday, January 25th, 2021, stocks of the week. And we are going to just cover a couple of stories here, look at a couple of charts, and throw out a couple of ideas that I think you probably want to get involved with. And I want to show you something that I'd be trimming right now, even though I love the company. But first, a story. Remember GameStop? A few years ago, I wrote an article that basically said, unless GameStop changes the way that they do business, they're going to go the way of Blockbuster. And now they have an activist investor, a guy from a company called Chewy, which used to sell animal products online, pet products. And he said all the exact same things that I said. Now, the company hasn't done any of those things, but they're probably going to try. When a stock goes parabolic, the way that GameStop just did on speculation, what you really need to ask yourself the question is, am I too late? And I think the answer with GameStop is probably. So even though we made a couple bucks trade in this 2-3 years ago, the reality is that the stock just crumbled for years and years until this new activist investor got involved. And now the stock is going straight up. And in this article that you should read with your Bloomberg subscription, which I suggested that you all get, he talks about Reddit. And he talks about how a group of investors on Reddit have bid this thing up to obnoxious levels. So this is the thread on Reddit that you should pay attention to, because this is where they do all the stupid things. So here they're talking about GameStop, and they talk about what are their moves tomorrow. And I've told you there's hedge fund guys behind these threads instructing a group of very eager small traders to bid things up that they think they can manipulate the price of. And when they move in a herd and they buy calls, often on times on margin, they are able to spin a stock up if it's heavily shorted or lightly traded. They're doing it in penny stocks all over the place. I'm telling you that a lot of the stocks that they're doing this to are probably going to drop between 50 and 99% at some point. So the question for you becomes is, do you get in on the chase? Well, GameStop is not worth anywhere near what it's trading for. They actually are pulling in less revenue, and they're not profitable anymore. Now, they have all sorts of stores where the leases are going to be up soon, and I think they're going to get rid of hundreds and hundreds of stores. I told you that they had to shrink by 500 stores a couple of years ago, and I think that's about to happen. With GameStop, the question becomes, okay, now that the stock went from $2 a share to $65 a share, and I think it's up again today, is it all priced in? And the answer is for sure, right? They have to compete with EA and Microsoft and Sony and Activision and go right down the list. So unless they convert their stores into very experience-based selling experiences, they can't make enough money to justify the debt of the company that they have now and then spit out enough revenue to justify the stock price. Just it's an impossible valuation equation at the current price when you factor in risk. Now, could they eventually grow into the $60, $70 stock price? Sure, over many years. Do you want to buy it now just because it went up? You could try. Good luck to you if you try, because one of these days you're going to wake up and it's going to be limit down, and then it'll reopen, it'll be limit down, and it'll reopen, it'll be limit down. So that's what's coming. But it's interesting to me that these guys doing something that is technically illegal are getting away with it and spinning up all sorts of stocks. Eventually it catches up with them every time. It has every other mania. But I mean, just take a look at this. They're just talking about how do we spin this up? And they have other ideas. But right now, it's pretty much all about GameStop. What I think is that these guys are going to do it to other stocks. So that might be a better question to ask, is what stocks are they going to do it to in the future that they can spin it straight up? So I ask you about Sirius Satellite. It's got a quite good short position on it. The business is moving in the right direction. The analysts are starting to move in the right direction. Wells Fargo just recommended it today. What could this is without a bunch of millennials bidding this up. This is where I think it's going, from 6 to 16. What if these guys adopt it? It's a closely held stock. Why is that? If you read the article from the other day, it's because Liberty Sirius is 80% owner, and Warren Buffett owns 15% of Liberty Sirius. John Malone is the majority holder. So who's going to sell the shares of this if it starts getting bid up? What sellers are there? Remember what I talk about all the time. How many times have I said that margins, money at the margin, is what determines price? Price is determined at the margin. So it wouldn't take many buyers to bid this one straight up. Maybe somebody will mention that to the Wall Street Bets crowd. Maybe somebody. So if you don't own Sirius right now, I urge you to buy a few shares and also buy Liberty Sirius as well, because you get the free shares in Live Nation, essentially. So read the articles. Merck was in the news today. This is the one that I thought was going to be the winner in COVID vaccines. Glad we didn't ever take the position. It's not. So Merck is coming off the plug and play list. And I would not buy this one unless it has a very substantial drop. Apparently, COVID is so dangerous and mutates so fast that mRNA might be the only option. And that should scare everybody that we have to resort to mRNA. COVID is very dangerous. We've been saying it. I've been saying it for a year now, months ahead of everybody else. And the idea that Merck can't figure this one out, it should really scare the hell out of you. Moderna CEO was on Bloomberg today. He said, look, we're trying to figure out how to do booster shots because clearly we're going to need them, which if you were listening to me back in March and April, what did I say over and over again? That this is not going to be a one-shot deal. You're going to need a new shot every year, every other year, forever. What else did the Moderna guy say? He said that they were going to combine the COVID shot with the flu shot. So Moderna is another stock that's bid up into the stratosphere. That's probably one that we should buy if there's ever a big correction, because it looks like they are in fact going to be a big player, and mRNA is probably not going to go away. Yeah, I don't have time to read this. Somebody just posted this. Tell me what it means. So the antivirals over at Merck, that's probably what he was talking about. They're not going to be that big of a deal either. So when you look at the plug and play list, there's some stocks that on the daily charts are oversold or approaching oversold. And you have to ask yourself the question, should I be looking at buying them? Well, as usual, you want to go to the weekly chart. And this is just another way of looking at volume. Go to the weekly chart and you say, well, Barrick seems right in there to be putting in a base. So once again, I implore you, if you don't own Barrick, buy Barrick, because this one could shoot off to the races way up here. And they're increasing their dividend. And Janet Yellen doesn't like Bitcoin. Lockheed Martin, on the other hand, right, is seeing it selling, and it's starting to exhaust. It looks like it's going to land right in our buy zone. So if Lockheed Martin, and you could conceivably buy it right here, it's at a 0.5 level. You know, if you're dying to have a couple shares, go ahead. But remember, it's not that far off its all-time high. Only about 20 some odd percent below. That jitterbug right there, where it breaks up like that, this spot where it hits and comes down, that 618 line is a pretty magical line. So it doesn't have to go down much more to want it. 320 something. SunPower, straight up. These are all the times I mentioned it to buy. And now it's around 50. It's not getting much volume anymore, is it? There's just not a lot of people pushing this one up. severely overbought on the weekly. Oh, it's on the weekly chart as well. Severely overbought on the weekly chart. MACD has gone ballistic. So I mentioned it already the other day. You ought to be trimming severely here. I would take 100% of your profits off the table. So if you bought it at 10 and it's 50 now, you probably should sell 80% of that position. And I do think it's going to get back down in here into the 20s, but you can certainly start scaling in the middle 30s. You know, if it just kills you not to have it. These are the spikes that you look for. Then you have to take something off the table. Don't be a gambler. Put some in the pocket. Doesn't mean don't keep some of it in case it keeps going, but making 400 or 500% on something in a year, you ought to put some of that in your pocket. All right, so I subscribe to something called MarketWatch. I did this recently because there's a lot of money to be made in SPACs. So I am doing deep dives into this whole sector and looking at a lot of companies. I got a tip off from Silicon Valley about one of them. And I think that just being able to get into some of these SPACs before they announce their deals, literally buying the rumors, you don't have much downside. 10, 15%, because with a SPAC, you get your money back if you don't like the deal, or if they don't do a deal, minus fees. So if you can buy these SPACs between $10 and $11.50, $11.50 being where the warrants kick in, you're getting a tremendous amount of upside. The warrant that we should own now, come on, kids. This just went public, so it doesn't mean anything. But the Fortress Capital acquisition is 1 ordinary share and 1/5 of a warrant. So for every 5 shares you buy, when this splits in the shares and warrants, you'll get a warrant for every 5 shares of the stock that you own. Read the article, it's up there. That's the article at Fundamental Trends. It's also at Margin of Safety. Under $11.50, a lot of these SPACs are just pretty great deals. Why? If they have the right amount of capital and the right management and they find a deal, they're generally going to see a double to a triple pretty quick. Why? It's because otherwise they're not doing the deal. These guys are getting free money with these warrants. So when they set these up, that's the deal. They put in capital to create the SPAC. They get shares, but then there's also a warrant involved. It's free money. Why do they do that? Because they like free money. So if you can buy these before they split on the idea that you believe in the management team and the amount of money that they're going to be able to buy something that's beyond the speculative phase, that's what you do. So if we take a look at, we want to look at FCAU. This is a different one. It just went public, so it's not even in here. In any case, this is, read the article. I like this one. Understand how it works. Chart doesn't matter. All that matters is, can you buy it under $11.50? If you buy it under $11.50, those warrants are super valuable and cheap. You can buy it above $11.50 and they're still valuable, but they're less cheap. Between $10 and $11.50 is where you're getting your biggest bang for the buck. Any questions about anything in particular? Once again, I've been looking at the energy and materials. Very interested in what Freeport has to say tomorrow. Semi-interested in Hess. Semi-interested in Core. They're all going to say the same things that I've been telling you. They're all in trouble. All those energy stocks. You saw what happened, or what's happening in Asia. The tankers, now that they're unloading their oil to China, and they have to go back to the Middle East, a lot of the older tankers, any tanker that's over 10 years old, and especially if it's closing in on 15, they're just stopping at the scrapyard and they're dropping off the ship. The market for VLCC is very large, right? Transport ships. I forget what the CC is, container cargo or something. There's just not enough demand for oil, and it's not going to meet 2019 levels until 2022. And then it's going to start heading down by sometime in the middle of the late 2020s. These companies are all in trouble. Handful of the more conventional and lower costs post sunken costs are going to do well. So some of your deep water companies and Suncor up in Canada probably do okay because they don't have to put much more money in. Somebody asked me about thoughts on Ring. I don't even know what that is. And we've had this talk before. Don't ask me for my thoughts on something that I may or not have heard of. Tell me your thoughts so that I get some context. Then maybe I can respond. Very large crude carrier. Is that what that stands for? Yeah, I've forgotten enough stuff. All right. We don't have a lot of questions, but I will tell you, Sirius, get into it. Liberty Sirius, get into it. Fortress, get into it. At least a starter position. And read the articles and then what else I have coming out. And I'm going to keep going through these SPACs because there's some cherries out there. And I want them before they split into the shares plus the warrants. I want to buy the warrants embedded and buy the rumor. And the criteria is pretty simple. Great management team with enough money to buy a company that's post the speculative phase. We don't want to get into a SPAC that's buying a $300 million company. We want to get into SPACs that are buying billion to $5 billion companies that are looking to scale up and become S&P 500 companies. You want to line up all the different capital flows into these stocks. And if you can get these knuckleheads on your side from time to time, all the better. And I think that can happen with Sirius. And this, they might be able to bid this one, way up here. Not saying it'll happen, just saying it could, because it's what they do. All right, let me call it a day there, and then I'll answer a couple questions off here.